If I were a rich man, yabba-dabba-dabba-dabba-dabba-doo, all day long I'd sing a little song. Hi, I'm going to show you a strategy on the whiteboard and then give an example on the chart. Wait. Sorry to interrupt the intro, but have you ever been wounded by the markets or looked at the screens with dread? See what I did there with that clip at the beginning? Brilliant film, by the way. If so, at the end of the video, please take a moment to look in the description below. There's some links that can genuinely help you, and also details of the Scruffy squad. It's direct access to myself on a daily basis, and I teach the guys exactly what I do and hopefully guide through the choppy waters of trading. So that sounds good. Please check it out and enjoy the video. Hi, and a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the Scruffy Trader. What I'm trying to do is kind of inspire you with your own trading, and maybe show you a trick or two along the way. So if that sounds good, please share the videos, click the little subscribe and like buttons. It genuinely helps. And we'll have a chat over a cup of coffee. So what am I looking at today? Well, today is a follow-on from a video I did last week, and I mentioned within it the golden cross strategy. And it's an old strategy, but it's a real good one. And it works really well for swing traders. And swing trading is something that I'm asked about quite a lot. And it's quite difficult to show a swing trade in real time, just by the length of time that they take to play out. Day trading is relatively easy, because I can tell you what I'm going to do at 9 o'clock, which I often do with the Scruffy squad. I'll say this is what I'm going to do. The trade will take place around 12, finish maybe a couple of hours later, and I'll show you guys the same day. So that's quite easy to do. The hard part of that is actually shouting the thing out before I take the trade. Now that is a little bit more difficult, and that's where my love of science fiction comes in. That's right, some people seem to think I have a TARDIS. I don't. I just have a solid business plan, and I follow my rules meticulously, and that's what makes me consistent. That and the fact that I don't trade as much as what people think. See, the industry has you believe you're in and out all the time. No, that's your road to ruin. Once, twice a day, you'll be fine. Okay. And likewise, with what I'm going to show you, these are trades that you can set and forget, and you can build on them throughout the year. Now, the rules of them are very simple. It's just a couple of moving averages and common sense. So let me run you through it. It's called the Golden Cross or the Gold Cross system. It's been around forever, and a lot of the major banks and whatever you look at this sort of thing. It's just one of those classic investment strategies. And it really is very simple. There's two parts to it. You've got the Golden Cross and what's called the Death Cross. And it's basically a moving average cross system. And they work on high time frames. You try and do this on a low time frame, you'll be whipsawed and you'll just lose money. They never work on a low time frame. But if you're on a 4-hour chart, a daily, a weekly, superb. So that's your first rule. What is the time frame? The time frame is your 4-hour stroke day charts. That's your first rule. And then it's literally a trigger and an exit. So what I'm going to do is I'm going to draw a line in, like so. So that is your bias line, and it is a 200 moving average. It doesn't matter if it's an EMA or a standard moving average. And if you put the two of them together, and I'll show you that on the charts in a second, they are pretty close together anyway. And the second one is a 50. And what you're looking for, so that would be a 50 moving average. So the second rule is, put that there, MA 200 and a 50. With me so far? Very simple. What's the trigger? Well, it's the cross. Here. Okay. So you would enter long when the 50 crosses above the 200. So you are going long at that point. And you hold it till it goes here. And you go short at that point. So you're kind of always in the market, which is one of the beauties of this, because it's getting in, it's getting out, but there's a little twist to it, and I'll show you that on the charts. So it's really only 3 rules. So, and you enter on the cross. Simple as that. So let me put this into perspective for you. I'll pull a chart up and I'll plot the moving averages on it, and I'll talk you through the entry point and the exit point. But that's about as simple as it gets. It really is. So come with me. Okay guys, so I've come down onto the charts to show you the golden cross in action, if you like. And it really is a simple strategy. And it's probably one of the easiest set and forget strategies there is. Now, it doesn't really matter what the product is. They kind of work best on markets that trend a lot. Things like the indices, metals, gold, that sort of thing. But it can work on pretty much any instrument. Just by nature of the fact it's a 4-hour and a daily. It means once it's moving, it's moving. So let's have a look. Crowd favourite, FTSE. Don't often show the FTSE much. So if you take this out to a daily, and you can see there's plenty of waves in it, and it's how do you capture these waves, and can you really make a decent profit out of them? Well, whenever you're looking at a day chart, it's an investing mentality. So you're going to be in it for a number of weeks and months. But the rewards are there with little pain. What I mean by little pain is you don't have to watch the markets all the time. You can just look at them every other day or every day sort of thing. They take very little babysitting is what I'm getting at. So all you need for this strategy is 2 moving averages. Doesn't matter if they're exponential or standard. And as I was saying on the whiteboard, it is a 50 and a 200. Just like so. That is it. It's all you need. And what you're looking for is the cross of those 2. But then also what you need to do is you have to put in a little bit of management. Okay. So let me show you. Draw a vertical line on the cross. You can see that they've crossed here. So your entry candle, depending on when you see it, is either going to be this green one or this red one. Okay. Looking at it, it looks like it's the green one, which is there. Okay, so it's crossed over. That is your entry point. First thing you do is define your stop. Okay, so get your stop into place. And it is the candle that you're going to enter on straight down to the 200 plus a little bit of a buffer zone, just in case there's a bit of a wick. Now this is your initial stop. It's your maximum hard stop. And we'll just colour that in red for now.
Now we need to define roughly where we're going to get in. Now, I'm a great believer that you always make the markets come to you. So what you would do is you would set your order at the top side of that candle. Again, just a couple of little ticks just to give it a bit of room, and we'll do that in blue so we can see. So what this has done is you've now defined an exact risk, okay, which is here, this area here. And when you look at it, it probably looks pretty scary, and it does, because that is 381 ticks. But what's the reward? You know, because it's no different than dealing on an hours chart, going 20 to 20. In other words, 20 risk to a 20 reward, 1 to 1. Just means you're waiting that little bit longer. So does it do a 1 to 1? Well, it does that easily. Does it go near the stop? Not even close. So it's a nice gentle trade. And that's if you just set it at 1 to 1. Well, what if you wanted to be more than that? Say 1.5 times to 1. What would that be? So it'd be up there, which is 500 ticks, which is about 1.5 to 1. So it really depends on what your tolerance is to your sort of risk appetite, shall we say. Now, you might get a little bit scared of that. You might think, that's a bit too much for me to bear. You know, there are ways round it. And that's where your ATR comes into it. So if you put an ATR on a daily, now it's looking at, well, 100 to 90 a day sort of thing. Just looking at that. You can start reducing your risk by taking money off the table. And what you do is you go, right, half of the daily ATR, I am going to take off 10% of my trade. So as soon as that has gone 50 ticks in my favour, I'm going to take 10% off. And it's that simple. Another way of doing it is kind of the way I do it. I scale all the time. So I would open up, say I'm on £5 a point, I'll open up 5 positions at £1 each, and it would close at 50, 100, 150, 200. So that would be the way I would have worked that out. And then the little tiddler on the end, which is essentially being paid for by the others, because even if that stop came all the way down, as only a £1 position, the others would have paid it off and left you in profit to run as far as that would let me go. Simple stuff. And there's many ways that you can get into it and scale into it or manage your trade. But as a basic point of view, it's just in on the cross and out on the cross. Simple as that. You know, and if you're interested in seeing different ways of scaling and management, by all means come visit the Scruffy squad, because that's something I go through all the time. And I do think trade management is the key to profit, you know, because X inevitably doesn't always mark the spot. It can tell you where to get in, but there's a lot of things happen before it gets to the other end. And sometimes you just need to be a little bit box clever. And that's why scaling often helps you. And you see a lot of traders scale. The rule of thumb for a day trade is half of the ATR and then 10% off each time. It is a good way to work forward. Okay, you could even sort of do 20% at a time on 5 positions. So you take 20%, another 20%, and eventually you're just left with the last 20%. Play with it, see what you can find. But there you go. That's what the golden cross is. It's how it works. And as always, guys, do what you love. And the money will follow. See you all in the next one.